Sequoia Capital invested $8 million in WhatsApp in 2011, and when Facebook acquired WhatsApp in 2014 for $19 billion, Sequoia made a profit of $3 billion, resulting in a return of 375 times the initial investment. Accel Partners made 700 times on the investment into Facebook. But what was the role of these VCs inside the businesses beyond just giving them the money? As a former VC myself and a startup founder who raised more than $4 million, I've seen firsthand how important it is to pick the right VC. Now in this video, we go through examples of VCs making a difference and what makes a top tier VC different to so many other venture capital funds out there. At the end of the video, we release a ranking of the top VCs adding value. So first up, let's talk about talent and recruitment. It's fair to say that startups are usually run by young minds with a vision and a whole lot of passion, but they might lack experience. Most startups fail because of bad hiring, lack of competent leadership, and not hiring A players basically. And that's precisely why recruiting the right talent is so crucial if a startup plans on flourishing. A top tier VC usually has a platform team, and that platform team can help you find suitable candidates for various positions in your business. Now let's take the example of Accel. They assisted Facebook in the executive search and connected them with several key members of their company, including the Chief Operating Officer, Sheryl Sandberg. Next, we have strategic guidance. Everybody needs a game plan to succeed, and before formulating one, you must take into consideration all factors. Now, VCs utilize the insights from the market, other portfolio companies they have, and offer you suggestions on which market niche best suits your product, as well as any potential market and geographical regions you can expand into, or equally what to prioritize in your product build. In Google's early days, two capital firms, Kleiner Perkins and Andreessen Horowitz, helped refine their search technology and product. The two VCs offered a roadmap to include which products and features should be prioritized, along with development cycles and resource allocation. Now, on the third position, we have operational support. So you got your business up and running, you're in the mud and getting your hands dirty, but how do you make things move along faster? Well, one of the quickest ways of growing your business is streamlining your operations. VCs can recommend ways for oiling up the business bus by suggesting the best practices for your market, be it changes to supply chain, resource allocation, or hires. VCs also tend to stay fairly updated on the latest technologies, software, or hardware that can be adopted and implemented to achieve operational efficiency. Bessemer Venture Partners played a huge role in streamlining LinkedIn's operations. They worked closely with them, identified operational bottlenecks, and suggested the best practices and technologies they could implement to improve. This helped LinkedIn improve its efficiency, scale up, and provide a sustainable growth model. Now, if you learned something from this video already, if you're still watching this, please hit the like button below. Thank you. Now, on position 4, market expansion. Another task where VCs can be very helpful is market expansion. Most startups dream of making it big. The definition of making it big may be subjective though, but there are objective indicators that make it clear a startup is on the rise, such as forming alliances and partnerships and expanding its market. If you plan on venturing out into the sea and expanding internationally, you need to consider what people want and understand the culture and the local laws. VCs most likely had other portfolio companies expand into the new market, so they might have off-the-shelf market research for you to get insights into the latest trends, customer needs, and another competitive landscape, basically. Now, that's exactly how Benchmark VC effectively guided Uber throughout the entire ordeal of entering the international market, from building its presence, meeting regulations, and forming localized strategy to achieve a sustainable growth model. On position 5, we have help in raising your next round. Let's face it, the make or break deal for any startup is getting funding. Running out of money is the most common reason for why startups fail. If you have a fund who usually follows in the following round, but in your case, they decide to sit out, this is the equivalent of a death sentence for your startup. The one thing VCs have to do is to help you get the next funding round secured. Oftentimes, they do it by introducing you to other investors. So say if you raise a seed round, your first institutional round, then a good VC in the seed stage will introduce you to Series A venture capital funds, way before you actually require that capital. If you are a late stage company and you're raising a debt funding round, VCs tend to also be really helpful on that front. They can introduce you to other venture debt funds and provide extra credibility for the lenders to provide you with capital. Seeing the way Andreessen Horowitz helped Coinbase to get funding. They believed in the company's potential and offered initial funding. Not only did they connect them with potential investors throughout the whole life cycle, but also help pitch to them. Several rounds of investment later, Coinbase raised $100 million in Series D funding. Long story short, the IPO in April 2021 was valued at over $85 billion on its first day of trading. Next up is marketing and sales, the two elements that can change the game for your startup. VCs can be a sparring partner for you when it comes to your go-to-market strategy. VCs also usually have a good network of trusted agencies. At NUOPTIMA, the growth agency I own, we work with many VCs, and a lot of VCs recommend us to their startups and scale-ups, and of course, private equity does the same. And that's also where VCs can help you to drive revenue in a cost-effective manner, ROI positive, and basically save yourself the time to due diligence hundreds of agencies. Going back to the very first point around talent and hiring support, hiring the star salesperson is also something VCs can help you by adding the credibility to your cap table and also oftentimes helping you to convince that person to join, especially if they had a person work for another of their portfolio companies before and they know that salesperson will make a difference to your sales and marketing. Now, making another entry into this video, Andreessen Horowitz also helped GitHub with sales and marketing. They provided GitHub with support like initial investment, sales strategy, and development around the marketing campaigns. And basically, the firm greatly increased its user base and market position, eventually leading to GitHub's acquisition by Microsoft for $7.5 billion in 2018. Now, position number 7, community building. The story of the lone wolf may be cool, but it's hardly practical in business. Similarly, a startup cannot thrive in a small circle of their own. VCs play a major role in connecting startups with like-minded people. Most top VCs have a Slack community or WhatsApp group connecting all their portfolio companies to each other. Many VCs run webinars or even fly portfolio companies out for retreats and networking between the founders. You can learn about the success and failure from your peers. And you can derive wisdom from it too and not make the same mistakes yourself. It's worth mentioning that your peers in the community may be going through the same struggle as you do, trying to make the startup successful. That is why these communities can be so incredibly helpful. These meetups and communities are highly beneficial because you find potential opportunities, and a lot of the time your first clients might even be the companies from the VC portfolio. VCs can also connect you with advisors and mentors. Oftentimes, an advisor could also be on the board of another big tech company, which might end up acquiring a business. We see that trend a lot. Let's take a look at LinkedIn. Accel Partners invested in LinkedIn in the Series B funding round in October 2004. They saw the potential in LinkedIn to revolutionize professional networking. Accel used its network and helped LinkedIn form corporate connections and build professional relationships. It assisted them in hosting professional events, webinars, conferences, and meetups to boost community engagement. Long story short, with their assistance, LinkedIn's IPO was a major success in May 2011. It led also to the subsequent acquisition by Microsoft for $26 billion in 2016. Now, before I cover my last point, do not forget to subscribe to my channel and hit the subscribe button below. For a final point, let's talk about exit planning. VCs provide necessary guidance in this matter, such as the optimal timing to exit, determining if the company is at its peak before exiting to maximize valuation, and whether to file for an IPO or go for an exit to a strategic, i.e. a trade sale. An ideal scenario where this was executed with perfection is the story of WhatsApp's success. Jan Koum and Brian Acton from Sequoia worked closely with WhatsApp's founders to align on an exit strategy. They connected the founders with potential buyers, offered their expertise in company valuation and deal structuring, provided legal advice, and gave them a sense of credibility. This eventually led to WhatsApp being acquired by Facebook for a whopping $19 billion. And this, back then, was officially the largest tech acquisition ever. Now, we compiled the most detailed and complete directory of VC funds and their platform teams. Check out the list below on our website at NUOPTIMA.com. Let me know in the comments if I missed any value creation points, or if you know any other great examples of VCs helping startups. Many of the VCs I talked about here are both great stock pickers in the early stage venture world, but also provide value add with their platform teams. But there are a lot of VCs out there who have very little operational insight and won't be adding value to your business. So watch out for those, and feel free to also drop them in the comments so everybody can see them. Now, I drop an episode like this once a week. Please hit that subscribe button and that bell icon so you'll get notified every single time I release an episode. If you have a fellow founder, if you have a team member, if you're part of a Slack group, Telegram, or WhatsApp group with other founders that could get value from this video, please share this video with them. I want to help as many founders as possible. Thank you for joining me on this journey. I'm Alexej, and I will see you in the next episode.